right, so welcome to today's class, and today we're going to be talking about candlesticks and the psychology behind how they form. All right, so um, let's get into today's business. All right, now what are candlesticks? A candlestick is a way of displaying information about an asset's price movement. It is a type of price chart used in technical analysis that displays the high, low, open, and closing prices of a currency pair for a specific period. Okay, now I already talked about candlesticks in the previous course. Okay, now we have types of candlestick. As you would know, we have the bullish and the bearish candlestick. All right, now this is an example of how candlesticks form on your life chart. All right, so here is an example of how they form on your life chart. Now let's move. Now, if the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlesticks. The most trading platform use white color to refer to bullish candlesticks. But the color does not matter. You can use whatever color you want to represent any candlestick of your choice. All right. So the most important is that the open price and the closing price. If the close is below the open, we can say that the candlestick is bearish, which indicates that the market is falling in this session. Okay. Bearish candlesticks are always displayed as black candlesticks, but this is not the rule. You can customize your candlestick to any color of your choice. Like personally, my own candlesticks are what black and green. I like them that way. Sometimes I use green and red. Okay, so you can change the color of your candlestick to whatever color you want. All right, but then okay, white candlesticks. If for this example, we are using the white candlestick as what the bullish candlestick. All right, now on a bullish candlestick, the open of the candlestick is usually below, all right? It's usually down, close to what? Uh, let me just say the bottom of the candlestick, all right? And then this week, all right, this is called the week, okay? You should know from the previous course, this is called the week, all right? And then on a bullish candlestick, it usually closes on top. They are called the up close candlestick. All right. When you hear a trader say something and then he mentions up close in the candlestick, he's referring to a bullish candlestick. And then when you hear the down close candlestick, he's referring to a bearish candlestick. Because the bearish candlestick has its close below the candlestick. All right. So it closes down, it opens up from up to down. All right. So let's keep on going. All right. Now, next, we're going to be talking about candlestick patterns and the psychology behind their formation. This is where it begins to get interesting. Okay, so the first we have the bearish engulfing bar. Now, all candlestick patterns mean different things and have a different psychology behind their formation. Now, for this bearish engulfing bar, all right. Now, the psychology behind the formation here is that the bulls were in control, they were buying, but at some point they lost momentum and then the bears took over. Now, the bears took over and then they engulfed the previous bullish candlestick. Now, them engulfing this previous bullish candlestick begins to give the narrative that the bears are now in control and they will most likely take price down. So in most cases, when you see a bearish candlestick, what you will see afterwards is what price selling for some time. All right. So the next is what the bullish candlestick. The same narrative, all right, just the opposite, the inverse of it. The sellers were in control, and then they began to lose momentum, and then the bulls took control. All right. Now, in the bullish candlestick, in the bullish engulfing candlestick, the bullish candle is usually bigger and it completely covers the bearish candlestick. It completely engulfs the bearish candlestick. Okay, like in this case right here, this bullish candlestick completely engulfs, it completely covers the bearish candlestick. All right. So when this bullish candlestick occurs, in most cases, you would see that what follows afterwards is a bullish move. All right. Now the next is what? The next is a doji candlestick. All right. Now, a doji candlestick is also known as an indecision candlestick sometimes. Now, indecision means that there was a struggle between the buyers and the sellers, and nobody seemed to win. Nobody seemed to win the fight. So they closed at equilibrium. They closed at a draw. All right. That is why you see that the candlestick did not form as either bullish or bearish. It closed in between. Okay. It opened and closed at the same price. So what this doji candlestick means is that the buyers and sellers were in a struggle, but nobody won. All right. So most times it can also serve as a reversal candlestick, because if the bulls could get to struggle at some point, then it means the bears might take over price. All right. So let's go on with the next. Now this is a hammer candlestick. Okay. Now this hammer candlestick, the psychology behind the hammer candlestick is that the sellers were in control. And then this big wick, this long wick you see here, actually means that the sellers pushed down price, but before the candlestick closed, the buyers pushed price back up, and then they gained momentum, and then they continue pushing price back up. All right. So the sellers were initially in control, but then the buyers took over. All right, and then it closed as a hammer candlestick. Now, in most cases, hammer candlesticks are really strong reversal candlestick signals. All right, so take note of them. All right, take note of them. Now the next is what? The shooting star. It's just the inverse of the hammer candlestick, all right? And then the explanation of the psychology behind the formation is also just the inverse with that of the hammer candlestick. The bullish, the buyers were in control, all right? And then they pushed price up, but before the candlestick could close, the sellers came into the market, pushed price with lots of momentum, and then they closed as a very candlestick. And then from there, they took control of the market for that time, all right? Now you need to look at the candlestick trading Bible. Okay, when you read the trading Bible, you're going to have more insight on candlesticks and how they actually form. Okay, you're going to understand how they form, and you're going to have an in-depth or a more in-depth knowledge about the psychology behind their formation. I've already explained them well enough, but then if you seek more insight, go for this PDF. You can search it on Google. You can easily download it from there. All right. So that will be all for now, and then I'll see you in my next class. I wish you a happy learning, and I wish you a happy trading. See you in my next class. Bye.